What's happening, guys? We've got another Sunday scan coming at you for November 23rd. We have a short week this week. It is Thanksgiving. Typically, it's like a turkey crack week, which, we might have a 50 or 100% intraday winner, but it's 2020 and that happens every single day. So I would expect business as usual, and we'll see what happens this week, but I am prepared for the potential of the lack of sellers, potential of some price appreciation that we normally wouldn't see on relatively low volume. Anytime that I am super prepared for this week, it always disappoints. Anytime that I'm like, oh yeah, that's right, it is Thanksgiving week, then something goes crazy and I miss it because I had kind of forgot. So first and foremost, Danny Mowat, M-O-W-A-T-T, and Damian Claypool. You guys are the winners for the t-shirts this week. All you guys have to do is leave your key takeaway. Leave your key takeaway in the comment section, and every single week I will pick at least one winner. I felt a little bit, more in the giving spirit this week, so I'm giving away 2 t-shirts. But all you got to do, leave your key takeaway or something that you learned from this video, because it helps me help you guys. It also helps me kind of learn what people need to hear, where the aha moments are, and it allows me to spend time on things that you guys need to hear, and it makes me better at running the community at Investors Underground. So, we've had probably the most feedback. I think I said this last week or the week before, people with their best days ever, things like that, since I started this thing. And, that was back in 2008. So the concepts, the ideas, the levels, the discussion is only getting better in the room. And, as you guys know, we have the best veteran traders in the room always. It is the place to be if you are a day trader. And, the cool part about this, and the reason that I started Investors Underground, is because if I didn't, I'd be looking for a community like this. Something where everything is just centrally located. And, there's lots of different things that are out there, but nothing that is, no off topic, straight to the point, value add, 99.99% of the time. So that's our goal. That's what we do. And, if I didn't create Investors Underground, I'd be looking for something similar as a trader. So that's exactly what our business model is. And that is why we have so many veteran traders, but appeal to the beginners and the new traders, because we have all those types of educational videos. We have beginner webinars. We have different study sessions on the weekends. And it's just getting better and better every year that we go. We've got a lot of things that we're going to be rolling out soon. We've got a lot of different moderators that are going to start to take a bigger role in IU, kind of share what they've learned over the last couple of years and what it can do to help you. And I think that one of the biggest things that I repeat a lot is, my way of trading may not be for everybody. I mean, I can say that for sure. It's not, right? And somebody else's may be a little bit better, but the goal is to always take a little bit from everybody. And that's the key, and why, Investors Underground is awesome, because we have so many different styles. We've got swing traders. We've got a couple, option traders that regularly trade things. We've got momentum traders. We've got short traders. We've got long traders. We've got, multi-day, kind of outlook type traders. We've got intra-minute type traders. But it's all the same spot. So that's what we're about. Lots of good education. You guys see it with these videos. I don't think anybody works as hard as me. So you can, be assured that, what you see on Sundays is what I give every single day. I'm always 110% there, probably more. And, that is to the benefit of everybody in the room, because this is what I love. This is what I do. And, for those of you guys that are or have been circling around the community for a while and thinking about becoming part of the website, be part of the service, go through the educational material, all that good stuff, now is the time to stop circling and actually come and be part of the community. Again, it's not about one person. It's about learning from everybody and taking a little bit from everybody. And that's exactly what we've built. And I want you guys to make sure, or at least think over this weekend, what is your goal as a trader? Is your goal to join and try to follow the leader and hopefully you get, mediocre results by just chasing whatever they say to buy or sell? Or do you want to learn the process? And I've got this shirt on today, process over profit, because the profits come with a proper process. Everybody is always focused on profits. They look at the big P&Ls on Twitter. Those are great. They're inspirational. But if that's where your focus is, you're not going to make it. You're not going to make it. P&Ls are carrots, right? You dangle the little carrot and you try to attract subscribers. They're not what you should be expecting as somebody that joins a trading community. What you should be expecting is to learn a proper process, to be in an environment of veteran traders, and have conversation amongst all these different types of traders where you can start to pull different things. So this week is the week, if you've been circling, to participate in our Cyber Friday deals. It is the best deals that we ever do every single year. We have tons of free stuff that we throw in, and it really makes it a no-brainer. So if you've been circling, if you've been thinking about it, if you've been making excuses, now is the time, and I'll see you in the room on Monday. Now, let's get into the regular stuff. If you want this shirt, by the way, John at Loyal Brands, he's been a member for quite some time. I think maybe, going back 10 years or so. And then I noticed that he had a t-shirt company. And as some of you guys know, it took me like 3 months to send out t-shirts. So I just said, the hell with it. And I reached out to him. And so he's been fulfilling our orders. And that's kind of the IU model, right? All my programmers are actually also traders. And t-shirt guy is an actual trader. And, pretty much everybody that is involved in the community is at some capacity a trader. So everything is kind of homegrown within the community. And that's just how we do things. So if you are interested in this shirt, I'll have the description. I'll have the link in the description. All proceeds go to Traders for a Cause. So anything that, we would typically make as a profit, I'll get that check and that just goes to Traders for a Cause. As I've said before, we're not in the apparel business. But if there is any spread, that just gets deposited into the Traders for a Cause bank account. Swings have been insane. One thing that I've noticed, I've said it before, but one thing that is something for you to kind of consider is that when you're trying to buy a stock, it's not always the best to try to anticipate when it's going to rebound or when it's going to do that curl, when it's going to actually go. The idea, at least in 2020, stocks that double, a lot of times double again, right? Stocks that are going continue to go. Obviously, there's going to be some that, do the raises and all that kind of stuff. But the key is, do they have, a story, a catalyst, a breakout trend, a hot sector? What's the hype surrounding it? Is there a reason for them to go? But if you're trying to, anticipate when this one might rebound, you shouldn't be in that game right now. Shouldn't be in that game in 2020. The ones that are going up, as long as the dips are holding, they're working. And so anybody that paid any attention to last Sunday's scan, you guys know CBAT, I had that swing. And that went on to, so I was in the low threes, high twos, low threes, and it hit 12. I sold out around 6:10, 6:30 or so. I traded a few times after that, but not with any size. AYRO, if you guys paid any attention, I was long on Friday. It was on last Sunday's scan, and I was long 320s, 340s, and it hit almost $9 or maybe over $9 on Friday. So again, I made that on size until about low sixes, mid sixes. And I thought I did well, with just like CBAT and AYRO. But then they both win another 50%. So, it is what it is. APWC, the idea from 140s. And CRMD, for those of you guys that have been following along for a while, you guys know that I'm involved since 5. I've had it in my scans since September. Long term, tuck away. Gonna let it work. Catalyst in the pipeline, you name it, whatever. And not really looking at it from day to day. So on the flip side, the good part about the swings in this market is drawdowns are really, they're there, obviously. Some of them pull back, but the difference between the breakouts and the ones that don't work, they pretty much just consolidate. If they consolidate for a few days and they don't go, then I just move on, right? So anyway, just phenomenal swing market as well. Something that I don't typically do, but we've got Michelle in the room, we've got Paso in the room, and they're more focused on bigger picture ideas. We've got Stapes, who is amazing at the SPACs, which has been just an incredible week for SPAC investors. I mean, they're just going nuts again. The other point that I wanted to make was understanding themes. So, you've got two different types of themes, or you've got multiple, but something like CBAT last week, a lot of the China names were starting to get bid up. And then we had CREG. And so CREG, I got long on Friday, and I ended up selling some after hours. It spiked all the way up to 560s after hours. I got long in the 415s, 413s, 417s, somewhere around there. But again, the China thin names are getting bid up. CPSH, among many different names. I just look for the buyers. And if the buyers are there, then I want to be involved. In the event that they don't go, you're just risking off of support levels. So, it's a great risk to reward right now. If they launch, lock some in, and then just let them work. And we'll let them work until they don't work. And so that's been, my strategy with those. It's been working extremely well. But that is an example of a theme, China theme, right? The other type is sectors. And we talked about this when we did the COVID Traders for a Cause event. I broke down different sectors and themes. The other sector would be EV market, right? Electric vehicle market. Now, you've got NIO, you've got XPEV, you've got LI, right? So obviously Tesla is Tesla, and I don't even watch that for the most part. It hasn't really been dictating the moves. It did when they got on the S&P, and it moved all the, I guess maybe it legitimized the EV names a little bit more. But NIO, XPEV, and LI have been just intense, right? So they break out, they squeeze, they pull back. They're holding an overall trend on the daily. And that's what matters, right? We don't want to anticipate when they're going to pull back, because if we're trying to anticipate, a lot of times we're just going to get, bent. It's going to keep on, dip, rally, and we're going to get exhausted from that. So understanding where momentum is coming. So for example, with a theme or a hot sector, pot stocks. We had a lot of pot stocks last week that were going. We had ACB, we had TLRY, we had CGC, and they all started to fuel one another. And then, so this week and last week, we've had obviously the electric vehicles, NIO, XPEV, LI. Well, what did they do? They started to fuel SOLO, they started to fuel BLNK, and they fueled AYRO. So that's why I was interested in the AYRO example, which if you look at the daily, it had the wicks every single day. It continued to hold trend and continue to go higher and higher and higher without breaking down on the trend line. So that was a great opportunity, and that's why I was swinging AYRO based off of the fact that the sector was extremely hot. So the next thing that I wanted to go over was fades, and they're not always bearish, right? So you need to think about, where the daily support is. And we're not in the business of anticipating the day that it's going to break, right? We can wait for that to crack, and then we can get a good piece of it after it cracks. So for example, if you take a look at NIO, the day that it pulled back that day where it was down about $10 off the high, almost $12 off the high, I think. If you look at that day, the biggest move was actually after the first crack. after the first crack was the biggest move. Sure, you could have got 53 to 52, 51 real fast. That was $2. But there was another $10 per share after that move. And that is the point that I want to make here when everybody is trying to find the tops on these things. There's no rush right now. We're in a very demand-oriented market. Supply and demand, right? We all learned this in college, maybe high school, I don't know. But whenever there's more demand, and it overtakes the supply, and we talked about this a little bit last time, but there's a lot of different types of supply, right? There's just the regular supply, which is the amount of, the float that's available for folks to trade. Then there might be an offering, and then there's also short supply. So where shorts come in and they actually short bet on something going down. But if the demand is too high, they're not going to be able to buy it back lower, and they get forced to cover higher, right? So that's what kind of market we're in right now. So if you're in the business of trying to find the top, you're going to be let down more often than not because these trends are holding so well. So what you need to do is start to focus on where these things are basing. Always look left like we talk about, but find those key levels. AYRO, SOLO, BLNK. I know a lot of people got bent on them on Friday. But, that used to be old me. That used to be, the trader that I was, where I would try to keep on, hitting it to try to find the top. I will trade the front side. Yes. But I will also cover the front side until those key levels break. So the levels that I gave the room, for example, on Friday, I'm just thinking off the cuff here, was 770s on AYRO, right? So it kind of ramped up, and then I sized in. It went under 770s, but on the first test, it reclaimed and it held trend. It held bid. Whenever that happens, you do not want to fight that trend. That is a reclaim of that key level. You want to get the hell out, or at least size down. Same thing with BLNK. I think it was 2150s or so, 2050s, 2150s, something like that. And then SOLO, I gave a few different levels. And those change. As the stock goes higher, you just keep on looking left to determine where the level of support was. And here is the key, and I think this is where it ties it all in for you guys. I got a lot of good positive feedback in the Traders Lounge last week when I was talking about it. But if you think about it in terms of the concept of shorting and selling and buying and all that kind of stuff, if you think about it all together, when you are shorting, anticipating that a stock is going to go down, you're doing so before buyers might agree with you, before sellers might agree with you, right? So as you're shorting, people are still dip buying, right? And so what you want to do when you are shorting, you want to be on the same side as sellers. You want to be on the same side as those prior buyers now selling pops. Instead of still buying dips because it's the right thing to do, you want doubt in their mind. Okay, I'm no longer buying dips anymore. I'm going to sell pops. And as that happens, you'll start to see fails follow through momentum under those key levels. That's what you want. You want competition on the offers with you. You want to be a little aggravated that you don't have enough, right? It is nothing worse than having too many and being on the wrong side of the move. So keep that in mind. You want to be on the same side as the sellers if you're a short seller. You want to be on the same side as the buyers if you're long. And if you're trying to anticipate, whatever way that is right now, it's not a good place to be. There's definitely great trades, but you need to be a trader. You can't, anticipate being patient, anticipate the unwind. You can't do that in this market. It's just not working. The other thing too is fades are not always bearish, right? So a lot of times, literally, stocks just fade and trap more shorts. And I think that one of the important concepts to understand, even take Tesla for example, the S&P day, right? It gapped up huge and then unwound. So that could just be profit taking off the big gap. But at the same time, shorts feel really good about it because they see it as, oh, this is weak off this news. And, there could be people positioning all day to the long side. Next day, it was up another 30, 40 points. So just because something fades off does not mean it's over. You could take, now WWR did do a file in S1 overnight, but example of that one in VXRT, you guys can check out those charts where they've got this one-day wonder candle, and then they just kind of sit for a day or two, and then round two. That's been a trend that I've been noticing. So keep that in mind. You might have seen a huge breakout. You might have seen a lot of momentum that one day, and then if it pulls back, consolidates, don't take it off radar. Set those price alerts. All right, guys. So we are going to go over the scan as usual. Main watches are what I'm going to be probably focused most on. My goal every single day is to size a maximum of 2 names. I'm not looking to trade 20 names. I might dabble in a handful, but I'm going to size into only 2 at once. That's been a game changer for me. That was my one goal in the beginning of October, and it completely changed, how I had been trading. As you guys know, I got burnt out like crazy in September. I had to make a couple adjustments, a couple changes, and it's been phenomenal since. And it's you can't nail them all, right? But you as a trader need to find out what you are good at. So my main watches are what I'm good at. And then I look at failed follow through momentum, which is the second section. I look at continuation, which is long-sided, kind of bias, potential dip buys for breakouts. And then if you guys click over from the YouTube video, for those of you guys that are just watching it right on the YouTube, if you click the description, click through, you'll see about another dozen names, which Monday morning I will go through the charts. I will set price alerts. I will see that trade, and I will know what I wanted to do with it. So if it's a breakout type trade, or if it's coming back to support and it's a nice, consolidation type trade, if it's an overextended type of trade, I will put those alerts so that I know when they hit, it's ready to, time to trade. There's nothing worse than trying to, figure out something that's going like this. So that's how I set up my watch list. Again, I'm not trying to trade them all, but I am trying to get prepared to, know what I want to trade, when I want to trade it, and then be alerted when I should. And then every morning at 8:50 a.m., I do a broadcast. So, I take those watches, condense it to 2 to 3, max of 4 names every single day of what I'm looking to trade and how I plan to trade it. Most days I will react off the open. When I say most, I would say 3 out of 5 days, sometimes 4, but there are days, Monday sometimes, I take a little deep breath and let's just wait, because Monday is the start to the week. And if you do a really good job at being patient and starting the week out great, it's just a great vibe and a great way to set up for the week ahead. And so that's kind of how I take Mondays. Everybody gets excited. There's a lot of FOMO. And when there's a lot of FOMO, decisions that you normally would make that typically would be right are likely right, but it just takes maybe 1 or 2 more pushes to squeeze you out or try to get you out before they actually work. So I'd rather stay out of it, let that happen, let it exhaust everybody out, and just like we talked about, turn the dip buyers into pop sellers and be on the same side as me if I'm looking to short, and vice versa if I'm looking to long. And don't get me wrong, sometimes, it might appear that I'm short biased, but I long a lot of names, and, the IRA that I'm trading is all long-sided, obviously. So keep that in mind. There's a lot of long ideas. There's a lot of long opportunities. I just like to take advantage of the market inefficiencies when these stocks have, ridiculous volume, squeezing out traders, And, that's where my strength is. So that's where I focus my main trades. But there's a ton of other trades that I'm taking, on the long side and, some on the short side that are just, slow, steady type of moves. So let's jump right into it. And by the way, APVO, for those of you guys keeping score, that thing, they got a 50 takeout offer as well from Tank. So that was pretty neat. That day actually right before it, I had put on some of the 50 plus sells. And so, we'll see what happens. Hopefully they come and offer $70 or something like that. But overall, still an amazing opportunity, amazing trade. AYRO, first and foremost. So, like I said, I sold this swing trade way too early. But we've got a nice steady grind. Trading is about, I've been there before. I've seen that before. And so we have seen this exact trade, this exact setup on SCKT. And I tweeted that out. I tweeted out the image of it. We were talking about it about half an hour prior to this crack on in the Traders Lounge. We were discussing, this is kind of the setup that I'm anticipating based on how the tape is reacting, based on how things are going. So if you guys wanted to look, it'll take me a while to go back right now, but if you go back and look at this day right here where it traded 170 million shares, and you'll see that exact action. And I guess I can do it. I'll just do it on the 5-minute chart. But you'll see that exact kind of action, and then they just completely, yanked it down. So same kind of concept, same type of action, and AYRO was exactly that. Midday, after a bunch of squeeze outs. It's all about position sizing. Because if you are, trading this essentially what is a candle, a channel, you're going to be getting squeezed out every time it busts through, and then you're going to be hammering into the weakness every time it looks like it's about to crack, and you're going to be trading it wrong. So always look for the channel. Look at where they're going back and forth. And that's where your focus should be. So higher the better on this one. Ideally, we get some type of blow off towards 860s. That would be ideal. 850, 860s. I'm torn. Maybe it was all a squeeze out on Friday, but at the same time, we've got a short week. Maybe we hang around, right? And if NEO and LI and XPEV continue to base, it's really just like we talked about on the webinar this week, float rotation. And if it's spread out enough and, they're not doing raises and this and that, they technically could continue to hold well. But I'll be looking for, gap up, parabolic, failed follow through versus this level, and then potential fade. If we end up having some type of weak open, I'd be looking first 8, and then the next key level would be 780s, and you can see that because that's where they basically were supporting it late day. Now there's always sometimes that they go under key levels, but I look at the levels where it's hanging out the most. I call it almost like a magnet. So then we've got Solo. Solo was a great trade, a great opportunity. Another one where, if you were wrong, be wrong is always another shot. And Citron came out on it and gave a great opportunity there. It stayed relatively heavy after that. And again, we could gap down on all of them, or we could gap up. And so, it's kind of hard to tell or make a game plan now. But, basically the support midday was right around this 1060, 1070 level. So to the upside, that's going to be a key level, and then probably around $11 or so. But otherwise, you can see 1050s is now a sort of a key resistance level, at least after hours. So 1050, 1070s, and 11. Some type of push towards that level and fail. I do think that this is going to unwind. I think they're all going to unwind, but just like Neo Day, remember, after the first crack is the big trade. You don't have to get that one candle. Yes, sometimes there is a quick score, quick money, but after that, there's a long big picture unwind. So take advantage of that versus getting exhausted out on the front side of the move. PLTR has been fantastic. Just the levels are just insane on this name. They've been holding to a T and you know, producing phenomenal trades each and every single day. You guys saw, if you guys follow on Twitter, or if you're in the room, you saw the levels and the entries on that one. So, you know, anybody that's new, you can just look at this prior support even, you know, 19 level, becoming resistance, two attempts, under VWAP, and then unwind. So the goal on Friday, we almost got there. We got to, 18, or did we get under there? We got to 18, maybe one push of it, 18. My goal off open was 1780s. So we almost got there. I still hold the short position. I'm just letting it work. I covered the majority of the size, but I've been just working around a core trade on that one. It's been pretty good for us. But again, despite being short, I hope this gaps up. You know, I hope this gaps up. I hope, you know, we get a push towards this 1850, 1860 level, and then maybe pull back. Otherwise, 1830s has been the key level the last couple days. And if you go back and look at, you know, the prior days, you can see why that 1830 level was key. And so I never forget those levels. And so I'll use that to my advantage. So 1830s, exhaust, 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 and then, you know, fade off would be ideal. And we'll see what happens with that. KXIN. I've got this one on failed follow through. I don't want to try to find the top. This is one of those where old me would, you know, probably trade a good, decent chunk of shares, but new me, I just don't care to. You know, there's just so much liquidity other places that it's not worth getting, you know, caught in a couple circuit halts with 50 or 80,000 shares, and then all of a sudden you're looking at a, you know, 150, 200K P&L, you know, to the downside just because you got caught in two circuit halts. So that's avoidable. And that's avoidable by using less size and just focusing on stuff with liquidity. So for me, I'd like this to fade off radar. You know, it might hold this week. So, you know, keep that in mind. The volume, fantastic. Over 100 million shares and some great action, great range. A lot of people trading this, so it very well can hold. But if it gaps up and it fails and it's kind of off of radar, like CBAT, the day that it gapped down, I'd probably fade that. So we'll see what happens with that one. BLNK and KNDI. We've got these two in the EV space. This one was a nice one. It was short prior to this offering, which was fantastic. BLNK, you know, it held relatively well. So I would say that 2350 level is a key level, and then 23s. So pretty much, I don't really want to be fighting it unless we continue to show resistance at 23 and we start to break down pretty much under, you know, 22, 2250s. I mean, I would stay away from anything in between there. I would also probably stay away from, you know, anything in between here. You know, there's no edge, right? So if we start to get a parabolic move, we go 25, 27, 28, something crazy, fine. But what I'd love to see is peak out and fail at 22 a bunch of times, and then I'd probably be interested. Lyft and Uber, I've got those ones up just in case. Ideally, quick look left. You know, look at this prior level of resistance, you know, where there was support, and then it failed. So basically 49s, and then on Lyft, I'd be looking, you know, pretty much over here to potentially come back and retest that level. Right over here, 3850s, all the way up to maybe towards VWAP or so, but not a heavy, not very exciting watch for me. But the daily chart is what has me interested, and so if it starts to break down, I'm thinking that we could have this sort of snap day, right? But once it starts to hang on, don't be afraid to, you know, take that reverse trade. So I'll be watching that one. CIIC has been crazy as well. That was also one where, I was shorting it and I was actually up, but then I was like, you know what, this thing should have been fading. I'm done with it, and that was the right choice. So I'll be watching that one again. Look at the levels. There's no real reason to anticipate a trade unless 1660s, 1650s are fading, or unless if 1750s are basing, then heck, we might be going 20, 21, 22, and you just saw that with SBE. You just saw that with this huge breakout. So don't underestimate these SPAC trades. They have a knack for trapping shorts. They know what they're doing. They've done it more often than not. And you even saw it on Ride. FSR recently had done it, and HYLN rather actually has not yet done too much. But that's another one that they're just good at trapping. So be aware of that. Continuation side of things, OEG, I have a position here. I got long on dips. The goal was not to buy breakouts, but just buy when nobody wants it. Thought was that if we get over these 120 levels, 120 is going to be a key, as well as pretty much 130. Those were the two levels that I gave. It's been up since they reported, so steady trend there. I'd love to get involved at a bigger level if we gap up and hold over 120 base there, but I don't really trust it to maybe have one of those outlier days unless we start getting through 130s in a big way. Tiger reports, I think, this week. Tiger earnings, I think it's the 25th. So this is essentially the Chinese Robinhood. So I have a position here. I've been watching it. It almost reminds me of JMIA. That's how it actually traded with JMIA. They IPO'd around similar times. Pretty nice mover. But I'm just thinking that if it gaps down on an earnings report, that's kind of been the China name way. Where they run, gap down, and then they just soak it back up. So I would love that. And I would consider a longer term swing here if that trade pans out in the manner that I'm hoping for. CRMD, you guys know I've been there for a while now. I got involved in September on the dips over here, and I've been positioning since, and we're finally getting to go on. So we'll see what happens. I will likely scale in more after they get the raise off, but for now, hopefully it continues to go and they maybe raise it a much higher level. LGVW, I have a position there as well. I got there on dips on Friday as noted, and I was just thinking maybe some follow through momentum. Kind of compared it to CIIC, where you had that first big day, and then after hours it just kind of floated up like crazy. So I was thinking we could be in a situation like that. Again, SPACs are hot, so possible continuation there. Craig, you guys know I was there in the fours. I was buying dips throughout the day. Went nuts after hours. I sold some. We'll see what happens. I still have a position there. MRNS, no position, but you can see why I care. Just draw a line right over here. It's literally on the verge of breakout. I don't want to be a breakout buyer. I'd rather be buying dips and potentially anticipating it with smaller size, and then as it gets over this 16 level and it bases, I'd probably scale into the trade. Last but not least, CPSH, another one of the same. Let's see. I think it's where are they located? Oh, I guess they're Norton, Mass. They're next to me. But another one of the thin style names that is getting absorbed. But obviously a key level here is 320s or so, and then maybe 340s, basically 320s. Usually I look at where it's peaked out a few times. But this is after hours. It launched way up after hours, so I had trimmed some after hours just in case, so I can reload on Monday if it's any lower. And that's the same thing I did with CBAT and AYRO, and then the next day it went 50%. So sometimes you can't win. But anyway, that's the scan for tonight. I've got Staying Familiar. I've got FUV, NEO, XPEV, LI, WKHS, SBE, a few other ideas for potential melt-ups and swings. Like EXPR, STON, SUP for anybody that paid attention to the last Sunday scan. That thing's since doubled. So I only made it, it's at almost $5 now. The idea was at 2 for the swing. And I made it to about 380s. And 380s or 390s. And now it's 490s. So hopefully that was a good trade for you guys as well. That was another big one off of the scan on 2 weeks ago. 2 weeks ago's Sunday scan. So that's it. Again, if you guys have been circling for a while and you have any questions whatsoever about Investors Underground, the specials that we've got going on, those are this week only, and you guys know the drill. So, I mean, we don't do this deal very often, and the good part about it, we're not aiming to be the biggest room on the internet. We're aiming to be the best, maintain being the best, right? And so with that, we only onboard a number of people for each sale. So once those allocations are met, we close the sale down because we want the way in which you learn. We want the experience to be the best that you can have. And if we just try to sell as many as we can't offer that. So that is why we always have a specific allocation. And once they're met, they're met. And if you don't participate, then you can always participate next time. If there is a sale like that. But that is the reason why we do that. And our goal is to be and continue to be the best. So we want to have everybody's experience be the same. We know what we can handle. We know what we can't. So, we're not trying to do something that we can't do. So that's it. We'll see you tomorrow.